Welcome to Tesla Daily News Podcast. I'm glad you're here. Today is Monday, February 16th, 2026. In the next few minutes, we're covering the Tesla stories that matter most for Tesla, Robotaxi and Optimus production timelines, China's new design bans that could force hardware changes, an update on Tesla Energy scaling with Megapack, fresh signs of institutional positioning, and a labor flare-up at Gigafactory Berlin. Story 1: Elon Musk is telling investors the Cybercab ramp will be agonizingly slow at first, even while aiming for massive scale. Here's the context. Tesla's valuation still carries a meaningful software and autonomy premium. The core question for investors is not just whether robotaxis arrive, but whether Tesla can industrialize a new vehicle platform fast enough to move revenue and margins. Details: Musk is warning that for Cybercab and Optimus, almost everything is new, and that early production will be slow. At the same time, he's still pointing to ambitions on the order of 2 million robotaxis per year over time. Impact. For the stock, this cuts both ways. On one hand, it's a reality check that can compress near-term expectations. Slower ramp means fewer units, later revenue recognition, and more time with development costs before scale benefits show up. On the other hand, the message can actually reduce the risk of overpromising, which markets tend to punish hard when timelines slip. The big investor takeaway is to watch for concrete manufacturing milestones, pilot line throughput, validated cost targets, and regulatory progress, because those will matter more than aspirational annualized numbers. Takeaway: treat Cybercab as a multi-year manufacturing story, not a next quarter catalyst. If you're modeling Tesla, you may want to push meaningful robotaxi unit contribution further out, unless Tesla starts reporting hard evidence of a stable ramp. Story 2: China is moving to restrict yoke steering wheels and is also preparing a ban on hidden, flush door handles. Context: China is the world's most important EV battlefield. Regulations that force design changes can impact cost, production complexity, and even the speed of refresh cycles. For Tesla, China is also a key region for volume and for competitive signaling. Details: reports cite a draft national standard targeting non-traditional steering wheels, with implementation discussed around January 1st, 2027. Separately, Chinese regulators are preparing restrictions on hidden door handle designs due to safety concerns in emergencies. Impact: the immediate stock impact is probably modest, because the timeline points to 2027 and because Tesla can typically adjust hardware over a refresh cycle. But strategically, it matters. China is increasingly shaping what acceptable EV design looks like, and that can reduce Tesla's ability to differentiate on minimalism. It could also add incremental bill of materials cost if Tesla needs redesigned steering assemblies or more conventional handle mechanisms, and in a price-competitive market, even small cost deltas matter. Takeaway: watch whether Tesla proactively adapts China-bound builds ahead of deadlines. The key investor question is whether Tesla can maintain margins in China without relying on design choices that are now being questioned by regulators. Story 3: Tesla Energy gets another real-world scaling proof point. A 500 megawatt-hour Megapack system has gone live in Australia. Context: energy storage is one of Tesla's most important non-auto growth vectors. Investors focus on automotive deliveries, but margin expansion and earnings resilience could increasingly come from energy, especially as grid instability and renewable build-outs continue. Details: CleanCo Queensland officially launched a Tesla Megapack battery energy storage system with about 500 megawatt-hours of capacity at the site of the former Swanbank coal power station in Ipswich. The project is described as supporting peak demand and grid reliability, with a connection on the order of hundreds of megawatts. Impact: this supports the bull case that Tesla Energy is transitioning from promising to repeatable infrastructure product. Each large deployment strengthens Tesla's reference list, improves procurement confidence, and can help smooth revenue visibility. The risk is competition. Even legacy automakers are now talking about entering energy storage, which could pressure pricing over time. Still, Tesla's early lead in productization and deployment experience is meaningful. Takeaway: for Tesla watchers, monitor energy storage deployments, backlog commentary, and gross margin trends. Energy is increasingly a fundamental driver, not just a side business. Story 4: institutional positioning. Soros Fund Management disclosed a new Tesla stake in the fourth quarter. Context: big-name funds don't set Tesla's fundamentals, but they can influence sentiment, liquidity, and the narrative around whether smart money is leaning back into megacap tech and AI-adjacent names. Details: a report notes Soros Fund Management initiated positions in 2 AI-related stocks in the fourth quarter, including Tesla, with combined value around $69 million. Impact: this is not a buy because Soros bought Signal. but it can matter at the margin for perception, especially when Tesla is being debated as an auto company versus an AI and robotics platform. If more institutions add exposure, it can support valuation multiples during periods when delivery growth is under scrutiny. Takeaway: use this as a sentiment data point, not a thesis. The thesis still comes down to execution, margins, volume, autonomy progress, and energy scaling. Story 5. A labor and legal flare-up at Gigafactory Berlin. Prosecutors are investigating a union representative after a complaint tied to an alleged unauthorized recording. Context: Tesla's Berlin plant is a critical European manufacturing hub, and labor relations in Germany can influence stability, productivity, and expansion timelines. While one investigation won't change earnings by itself, recurring labor conflict can introduce operational risk. Details: multiple German outlets report that after a Works Council meeting incident and a Tesla complaint, prosecutors opened an investigation into a union representative over alleged unauthorized recording, which the representative disputes. Impact: for investors, the issue is less about the individual case and more about whether labor tensions escalate into slower hiring, higher absenteeism disputes, or political pressure on the site. Europe is a tough market right now, and any friction that affects Berlin's output or efficiency could show up in regional margins. Takeaway: watch for signs of escalation, broader legal actions, production interruptions, or management commentary that signals worsening relations. Story 6. Pricing and incentives. Tesla Poland is reportedly offering its own discount after government EV subsidy funds were exhausted. Context: incentives are a demand lever. When government support fades, OEMs often step in with price cuts or financing offers to keep volume moving, but that can weigh on margins. Details: Polish coverage says the pool of funds in the Nasudo subsidy program ran out, and Tesla Poland responded with a company-funded bonus of about 18,750 zloty. Impact: this is a microcosm of the bigger Tesla story. Tesla is willing to use pricing to protect demand and market share. For Tesla, the trade-off is the same as always: volume stability versus per-unit profitability. If similar programs spread, analysts may adjust regional margin assumptions. Takeaway: if you're tracking Tesla fundamentals, keep an eye on localized incentive replacements. They can be an early signal of demand elasticity and competitive pressure. Now, a quick theme check before we wrap. The big picture today is execution risk versus long-term optionality. Musk is tempering near-term production expectations for Cybercab and Optimus. China is tightening design rules that could force hardware changes, and Tesla Energy keeps stacking credible utility-scale wins. Meanwhile, institutional interest and regional pricing actions add texture to the demand and sentiment story. That's it for Tesla Daily News Podcast for Monday, February 16th, 2026. Tomorrow, watch for any additional clarity on robotaxi production milestones, further regulatory details out of China, and any new Tesla Energy contract announcements. Those are the kinds of updates that can move analyst models quickly. If you found this useful, subscribe so you don't miss the daily roundup, and follow us for more TSLA-focused updates every market day.